Well, hi everyone. Welcome to a new Shogunet video interview. We've been covering for the last few weeks the US casino reopening process amid several restrictions, and now the major sporting events return to sportsbook screens. So to discuss some of these topics, we are joined today by David Isaacson. He's the Vice President at Spectrum Gaming Capital, which is a very renowned US-based financial advisory company specialized in global gaming and resort industries, and including the fast-growing markets of sports betting and esports. So welcome, David. Thank you for taking the time to speak with us today.
Thank you.
So at Shogunet, well, we've been reporting several announcements from major gaming companies about the potential layoffs at their casinos across the US. The last few days in New York, now in Las Vegas, and it's affecting every major operator. So we would like to have your own words about this casino reopenings process, especially considering what do you think this massive workforce reduction will change the land-based casinos as we knew them before the pandemic, and also if this could be a significant turn in regarding the U.S. casino industry reliance on brick and mortar operations, and maybe seeing some shift to more online business. I mean, becoming more important in their operations.
Sure. So it's a great question. I think first of all, thank you for inviting me to do this interview. I think as far as land-based casino gaming, one thing that we have to keep in mind is that we are in unprecedented times, uncharted territory. So while the layoffs are inevitable as far as the pandemic goes, you know, the casinos really, we don't know what's going to come of this, and as far as the future and where this pandemic lands us as far as land-based gaming. But there's a couple of things that we know for sure. Number one, the layoffs were inevitable. Once you limit capacity in a land-based casino, and also limit the food and beverage offerings, hotel demand is obviously in decline because people are just not, they're reticent to move around. They're staying at home or staying local. So to the extent that a regional property, you know, they have their casino, they have their food and beverage offering, and they have their hotel. In some cases, they have a hotel. There's just limited demand for that supply right now. So, you know, layoffs are inevitable. Hopefully they won't be permanent. One thing that is interesting to me is that, and in speaking to operators, the casinos that have opened, although revenue is down because, you know, there's capacity constraints and people are not, you know, they're not going to the casino as often. There is a degree of pent-up demand to just get out of the house. And operators have stated to me over the last couple of weeks that although revenue is down, profitability is significantly higher than it was at the same time a year ago. So you're talking about going from a casino operation that may have had 30% margins up to 60% margin. People are just, they want to get out of the house, they walk straight into the casino and they start playing. You don't have to give them the food and beverage, the free food and beverage offering that you would in the past. They don't expect it right now, and they may not even be interested in it given the pandemic. So what has happened is the casinos are the highest margin business in a casino is the casino floor, and the low margin businesses, the food and beverage, the hotel, and ancillary services are limited because of the pandemic. And the result is that these casinos are much more profitable than they otherwise would have been. Is that a portent of a changing business model? Again, we have no idea because the pandemic is unprecedented. So my sense is that this is a one-time blip on the radar. Kind of a one-time event that is in favor of the casinos, but I don't think it's going to be a long-lived or suggesting that this could be a changed business model or a changing business model for the future, because at the end of the day, you need to bring people into the door. Right now they want to get out of the house, but in the future you will have to bring back the promotions, the F&B element, and all the ancillary services around getting people in the door in order to maintain your business. Your second question, just a comment on, you mentioned New York, you mentioned Las Vegas. I think regional gaming is in a much better position than destination gaming, or which Las Vegas is essentially a destination market. I mean, Nevada is a pretty small state in terms of population. So Las Vegas, and specifically the Las Vegas Strip, lives and survives and thrives on fly-in customers, and people are just not flying right now. So a place like Las Vegas is gonna be a much longer impact. And overall business models, overall business volumes, I don't think will recover for a couple of years, just because of the reliance on air travel. But the regional markets, it's different. It's a local business. It's people who want to get out of the house and go out for some entertainment. They visit the casino once a week or once a month. And it's kind of their local, just like a movie theater and going out to eat. It's their local form of entertainment. So in that sense, regional gaming is probably in a better position. But across the industry, by no means is this a good situation as far as the pandemic, obviously.
Yeah, I see. Yeah, very clear. One of the major news we've covered in this week is the merger between Caesars and Eldorado, which had its final approval in New Jersey. So I'd like to ask you about about this merger in particular, how this new landscape will impact. This already closed deal, considering it's one of the largest casino gaming company in the US. And what can we expect in terms of merger and acquisitions from now on as an alternative to coming out from this crisis for many companies, and maybe other financial resources that you are seeing these days, or that we will be seeing more often now, to recover from the pandemic?
So I think first I'll touch on the Eldorado Caesars merger. I mean, you have I read a couple of days ago that the merger is going to generate 800 million of EBITDA synergies, which is just a massive amount of unlocked profitability, or profitability that will be unlocked rather as an outcome for this merger. So that's obviously something that's very attractive. In terms of M&A activity in general, over the last couple of years in gaming, we've seen an uptick in consolidation. Mid-size or conglomerate gaming companies getting bigger. Eldorado is a perfect example of that. Eldorado bought Isle of Capri casinos, which was a portfolio of 14 or 15 properties. And now they've grown into acquiring Caesars, and now they're the biggest gaming company out there. Penn National is another company that acquired Ameristar, and then they acquired Pinnacle. So we've been seeing over the last couple of years the conglomerates getting bigger, and then the advent of the gaming REIT, which has driven demand for acquisition activity to increase. So I don't think the pandemic is going to spur even more M&A activity, at least on the land-based side, than we've seen already. I think we've already seen significant activity. I would expect that it would continue, but you have to find things that there's not a lot left to buy in terms of multi-asset portfolios. So I think as a result of the pandemic, you may see single asset casinos being sold into the mid-market gaming companies. Companies like Affinity Gaming, Century Casinos, Golden Nugget, these portfolio companies that have 4 or 5 assets that may want to get bigger by acquiring 1 or 2 single asset casinos. Twin River is another example of a small operator, or it was small, and that now has grown into 8 or 9 assets and will continue to be acquisitive. The pandemic for Twin River, they bought a couple of assets recently on the cheap. So there's a lot of opportunistic M&A activity that could result from the pandemic. But in terms of the really big gaming companies, it's going to be much harder for them to find acquisitions that move the needle. What I do want to highlight, and you mentioned this on your first question, is what's going on in digital gaming. I think that's where we're seeing the biggest impact, at least on a positive impact on valuation, on activity, and potentially legislative expansion as it relates to sports betting and even iGaming. It's well known, and a lot of companies like yours have covered the uptick in digital gaming activity as a result of land-based casinos being closed, and as a result of everyone being home. That's where I think there could be an increase of M&A activity. Either it's a sports betting company that wants to get into iGaming, or iGaming that wants to consolidate sports betting and poker and really grow digitally. You've already seen a couple of transactions, the DraftKings transaction where they acquired SB Tech, and now they have the B2B and B2C sports betting covered under one roof. They're now a public company. The Evolution Gaming acquisition of NetEnt, which was a recent acquisition, and it was in anticipation of significant momentum for digital gaming expansion in the U.S. And that was already going on when PASPA was repealed, and all of a sudden all these states started legalizing mobile sports betting. We always thought that with the widespread legalization of mobile sports betting, that would lead to additional expansion in digital gaming, iGaming, iPoker, etc. And I think then you bring in the pandemic, and it's just another factor that will increase this momentum.
Yeah. So, well, I was going to ask you about this. I mean, you think there will be a speed, the process will speed up by the legislation across the U.S. states, in states that need more sources of revenue, and you think this acceleration could be seen also for other verticals, including maybe casino projects. I'm thinking about Chicago, for example. So this crisis could be a trigger for more gaming legislation and especially an acceleration of these processes.
Yeah, I mean, I think definitely on the digital side. In fact, I hope so, because I think states need the revenue, right? And land-based casinos closing or being shuttered for a period of time, the revenue goes away. So from a state perspective, they want the revenue. From a casino operator perspective, they're going to get those iGaming licenses. They'll be able to essentially reach their customers both at the land-based property and at home, which is something they want. So in that sense, the two interests, the state interests and the operator interests, are aligned in order to expand digital gaming. So when your interests are aligned, I think that does bode well for an expansionary period. And I think just in general, the knock against iGaming is you're bringing iGaming, you're bringing the casino to people's homes. But I think it's already in people's homes, you know, and there's so much gaming that's already being done. You know, why not expand into iGaming? Why not tax that revenue? And for casinos, that, you know, they will be on board. You look at the New Jersey numbers for iGaming. You know, very impressive growth over the first 4 or 5 years, and then once sports betting and digital sports betting was legalized, all of a sudden iGaming grew at 60% year over year in New Jersey. So, you know, the more gaming you have, it builds, everything builds on each other. And, you know, there's a lot of money to be made and tax revenue to be generated from those businesses.
You see these, the taxation policies are in line with a prospect of a competitive market. I mean, for the companies to invest in this. I mean, there are many discussions about taxation in higher levels that maybe encourage illegal markets today.
Sure, I think for the most part, the legislative community and really the gaming operator community has educated the legislative community that you need to have competitive tax rates for online gaming. You know, because the experience is different, right? Everything is about getting people to play, right? So at home, you have so many different competing interests for people's entertainment dollar. You have to promote, you have to market, and get people online and get them playing. And the only way you can do that is with low or competitive tax rates. You know, this is true for all digital gaming. I think the operators understand that, and have done a good job of educating the legislators. You know, in some cases like Pennsylvania, you know, they have a high tax rate. You know, you could argue that New Jersey with a low tax rate may be leaving some money on the table, but in terms of the size of the industry, New Jersey is doing really well at generating the volumes, both on the iGaming side and sports betting. And, you know, I expect that to continue because the tax rate is competitive. You did mention the, you know, tax rate on land-based properties, and you mentioned Chicago as getting a casino. You know, the land-based gaming landscape is it's much harder to foresee, especially at this time, there being an expansionary period. I live in the Northeast. You know, those are the markets that I know best, and you know, it's very clear that the Northeast is a saturated gaming market. You look at the Wynn in Boston, a $2.5 billion integrated resort project, which, you know, out of the gate, it hasn't performed. It hasn't performed up to expectations. New York is always going to be talking about getting a casino. And in fact, Spectrum Gaming Group, our sister company, is completing a study for them now on you know, analyzing their gaming industry and the prospect of a downstate casino. So that is out there. Northern New Jersey's out there as well, and people talk about expanding gaming there. But given the current times we're in, you know, the focus right now is not going to be on more casinos or new casinos. It's really going to be on retaining jobs. And, you know, if you have to furlough people, getting them back to work and you know, saving our casinos. So it's a little bit of a different mindset right now, less in new investment, less expansion on the land-based side, more just protecting what you have.
Right. The last topic I'd like to address today is esports, because we're seeing many esports betting companies that are taking steps into, well, like going public and maybe acquiring other firms in the entertainment industry, such as Esports Entertainment Group and Landbased. So do you think these companies will gain a more leading role in the gaming industry, or will traditional gaming companies acquire or start to shift and expand their focus on esports betting after we come out of this crisis, with esports becoming a boom across the country? And and maybe product or user acquisition coming closer to the traditional sports betting channel. What's your view on this?
So I think esports is a very interesting topic. It's a very hot topic right now, along with sports betting and iGaming. Interest in esports has increased significantly since the pandemic started. But even prior to that, it was considered a high growth industry. And that's very good. That bodes well for esports. Revenues are growing significantly. It's becoming bigger and bigger, and it's certainly popular among the younger demographic. The problem I see with esports is on the profitability side. I've studied this industry for the last year and a half now, and it's really difficult to find companies that are making money in esports. You mentioned Esports Entertainment. That's a public company traded on the Nasdaq. Ticker symbol is GMBL. That company in particular, they did their IPO in, I believe, in April, and they acquired Argyle Entertainment. And by acquiring Argyle Entertainment, they acquired 12 million of revenue. That company is an iGaming and sports betting company. It's not an esports company. So, in one sense, GMBL, their business model is to do esports wagering, but their first acquisition was to acquire a revenue generating business in iGaming and sports betting. I think that what that suggests is that they're going to need time to prove out their business model. And while they're doing that, they're using their public currency to acquire companies that are generating revenue and potentially profitability as well. This buys them time with the investment community. It builds their story, but ultimately, they need to prove out how they can make money in esports. I'll give you another example: Modern Times Group, which is a long established gaming publisher and esports company. If you look at their financials, and they're very well known in the esports business. They own DreamHack, which is they're a content producer and tournament organizer around esports. They have their financials are broken out in gaming and esports. The gaming is what's generating all the profit, and esports is the money losing operation. So, and that's not to say that esports doesn't have a future or does have a future. It's just, we don't know right now. We don't know what type of business model will work, what's going to generate profitability, and what's going to be sustainable. What I can tell you is casinos are looking at this. Casinos are, to me, they're the perfect place to host esports events, bring people in the door, which is what they do when they put on, they have boxing matches and other entertainment events. It's just to bring people in the door. The issue is that, and so far, the people that they're bringing in are a lot of young people that don't necessarily spend the money at the casino. They don't necessarily patronize the high-end restaurants at a casino. They order pizza and beer with their friends. That's the demographic for esports. So the big question is, how can casinos make money, and how? And that remains to be seen. So while I do see a bridge between esports and casinos, and obviously the betting element is probably number one. It remains to be seen how well casinos can do if they get involved with esports, and I'm sure some of them will try. So we will find out.
Sure, we will. Well, thank you, David. We'll be following up on these topics. And so we'll love to keep discussing this with you in further opportunities at Shoganet. Thank you very much.
Thank you, Juan.
Goodbye.